Hi traders, this is Gomathi Shankar. I am very happy to meet you all in a new video. In this video, we are going to see Banknifty review for the month of September and we will look at the trade plan for the upcoming month, October. So without wasting any further time, let's get started. Before going to today's video, if you are a new subscriber, please subscribe to my YouTube channel, and if you are an existing subscriber, then you can share our YouTube channel as well as videos to all your friend circle. So in this video, I am going to use three layouts. Basically, this tab will show you daily chart with monthly CPR, and the next tab will show you the hourly chart with weekly CPR, and the final tab will show you the 5 minutes chart with daily CPR. So these three tabs I am going to use to explain the September month Bank Nifty trade opportunities. So in the month of September, if you look at the first 4 days, the candles are sitting comfortably inside the monthly CPR. Alright, so maybe for your understanding, let me turn on the indicator name labels for better understanding. Alright, so the first 4 days, September 1, 4, 5 and 6, they are inside monthly CPR. So what does it mean? It means a range bound market. It means there is no proper decision as per daily chart. Now, what we have to do in these 4 days, we have to take decision only based on hourly chart and weekly CPR. So on September 1, the candles are reversing from S1 and previous day low over here. Right, so I have to take a long position since the candles are reversing from S1 and previous day low, and my target would be weekly CPR. Alright, now let's come to September 1st. So on September 1st, you can see the candles are reversing from S1 and previous day low in 5 minutes chart as well. So it's like a double confirmation. The candles are reversing from S1 previous week low as well as from S1 previous day low. Then I can probably go for a long position when the candles are reversing at S1 and previous day low levels. I can take a long position, I can book my profits at daily CPR, and then when the candles are breaking the daily CPR, when the candles are coming out of daily CPR, once again I can plan for my second entry and I can book my profits at R1 and previous day high. So the first day of September is quite simple. Now the next 3 days, since the candles are inside monthly CPR, probably I have to take a decision based on the weekly CPR, as I said earlier. So the next 3 days, which means 4, 5 and 6th September, the candles are trading above weekly CPR. So though I am not having any decision as per monthly CPR and daily chart, I can take a decision based on hourly chart and weekly CPR. The candles are trading above weekly CPR. So probably these 3 days, I have to stick to long positions only. Alright, now let's look at the trade opportunities for 4, 5 and 6. So 4, 5 and 6, the candle on 4th, the candles are bouncing from daily CPR. Remember, this CPR is quite wide and the distance between R1 and previous day high is also very big, and the CPR is also wide. So probably it is going to be a range bound market. So you have to reduce your position sizing. Let's say you are taking trades with 2 lots. In these kind of days, you have to trade with 1 lot only. Now let's say you are taking a trade with 10 lots. Then in this setup, you have to take a trade for 5 lots only. Alright. So reduce your position sizing whenever you see a wide CPR or whenever you feel the setup is quite difficult. So on 4th September, what I feel is you can plan for a long position when the candles are taking supports at daily CPR, because we have to focus on long opportunities only. And 5th of September, on 5th of September, I would probably avoid taking short positions. Please remember why I am avoiding short positions. Now on 4th and 5th of September, I can go for a short at previous day high reversal, right? But I am avoiding short positions because the candles are still above the weekly CPR. So I don't want to get into a risky trade opportunity. I don't want to focus on any tough situations. So I am focusing on the trade opportunities based on the higher time frames only. So I would focus on long positions when the candles are taking support at daily CPR, and in fact this day my stop loss is hit, but I doesn't care because I have to focus only the opportunity based on the higher time frames. Now on 6th of September, let us look at the trade opportunity. On 6th of September, the candles are taking support at weekly CPR, but in 5 minutes chart, the candles are taking resistance at daily CPR, right? So this is a very tricky situation. Now on 4th and 5th of September, the candles were probably trading above the daily CPR levels and they are not trading below daily CPR. But on 6th September, right from the opening time, the candles are trading below daily CPR. So I can go for a short scalping. Now please understand the candles are above weekly CPR. So I have to avoid taking short positions for intraday. And so 4th and 5th of September, I avoided taking short positions because the candles were trading above daily CPR. Now here the candles are trading below daily CPR for quite some time. That is not at all an issue. But if you check on 6th September, from the opening time, from 9:15, the candles are trading below daily CPR. Moreover, I am having a narrow CPR, so I would be expecting a trending market. So I can go for a short position for intraday. So this is a quite a tricky situation. I will go for a short position. Still, I have to reduce my quantity size. I have to trade with 1 lot and I have to trade with 5 lots. Okay, I have to reduce my position sizing to 50% so that I am not getting into a bigger risk. All right. So I will go for a short position on 6th of September when the candles are taking resistance at daily CPR levels, and probably I will book my profits at S1 and previous day low. And when S1 and previous day low is broken, you can go for a second opportunity. Your target will be S2 and that day you are done. All right. So on 4, 5 and 6, I hope you all understood how we are taking trades in intraday, even though when we are looking at the higher time frames. Now, if you look at the 7th and 8th September, and in fact the next the week also till 15th September, the candles are trading above weekly CPR only. So from 7th September till 15th September, the candles are probably trading above weekly CPR. So let us look at only long opportunities for intraday. So let me go to 7th September. So on 7th September, what I would do, I will not go for a short position, avoid taking short position because the candles are above weekly CPR and quickly the market is coming above the daily CPR levels also. Now if you compare both the days, now here the candles did not even close above daily CPR. Candles did not even come above daily CPR. On the other hand, if you check 7th September, the candles are quickly coming above daily CPR and they started to trade above daily CPR levels. So probably when the first candle high is broken, maybe around this particular area, you can go for a long opportunity and you can book your profits somewhere between R1, R2, 50% level. Got it? And there is no other trade opportunity. Maybe you can avoid this short position. We are not focusing on shorts and we can go for a re-entry. Again, we can take a long position here and we can plan for a target at R1 and previous day high. Once again, you can plan for a long above R1 and previous day high and you can book your profits at R2, right? So in a single day, you are getting 3 entries and all the 3 entries are looking successful. So that's it for 7th September. Now on 8th September, as I used to say, the CPR is wide and the distance between R1 and previous day high is also wide. So it's going to be a range bound market. Now I have to reduce my quantity size. On 7th September, when I was taking a long position, I can go with the normal position sizing because they are above weekly CPR, they are above daily CPR, and in fact they are above monthly CPR also. Right, from 7th September, the candles are above monthly CPR as well. So I can go with the normal position sizing. Let's say I'm taking a trade with 10 lots, I can go with 10 lots. I no need to reduce my quantity size. All right. So on 7th September, I can go with normal position sizing. On 8th September also, I can go with the normal position sizing. But since it is a wide CPR and since I am expecting a range bound market, I can reduce my position sizing. So this is how I have to be wise enough to make money from the market. Okay, I should take care of my risk as well. So probably what I would do when the R1 and previous day high is broken over here, I will look for a long opportunity. My target would be R2 and my target is reached. Though my target is reached, look at the time. I am taking an entry around 12 o'clock and my target is getting reached around 2:30. So nearly I am waiting for my target for more than 2 hours. So this is where your risk management comes into play and you have to trade with lesser quantity. Right, so 8th September is done and on 11th September it is a narrow CPR. Okay, so you can go for a trade opportunity when the R1 and previous day high is broken and you will be waiting for your target till R2. Though R2 is not reached, the market is reaching 50%. Still at the end of the day you will be in profits. So 8th and 11th September seems to be profitable. And 12th September I am not going for a short opportunity, right? Because as we saw earlier, till 15th September and 18th September, the market is above monthly CPR and above weekly CPR. So why should I take a short, right? So 12th September, I will avoid taking short positions here. I will avoid taking short positions at previous day high reversal. I will avoid taking short positions at below daily CPR. So totally, I will avoid taking any short opportunity on 12th. And on 13th, since I am looking for long position, I will look for S1 and previous day low reversal. See, when the higher time frame is bullish, in intraday 5 minutes chart, I will look for long position at S1 previous day low reversal. I will look for long position at daily CPR reversal. I will look for a long position at R1 and previous day high breakout. Got it? So these three locations are important for taking long position. So I will go for a long position here. My target will be daily CPR. When daily CPR is broken, I will go for a long position. My target will be R1 and previous day high and I am done for the day. Got it? So on 14th September, once again the market is giving me a short opportunity. I am not interested in taking shorts. Moreover, it is a wide CPR. The distance between the CPR and R1 and previous day high is very high. So probably we will avoid taking trades. On 15th September, I will look for a long position. Maybe when R1 and previous day high is broken, though my target R2 is not reached, and maybe I can book my profit at 50% level. Even if I have not booked my profits, this trade, my stop loss would be hit. That's fine. And I will go for a re-entry after 2 o'clock when the candles have broken R1 and previous day high. And again, the market has not hit my target. Then I would have closed the day with a minimal losses. Got it? So 15th September is not much trending and that's fine. This is a part of a business. On 18th September, the market is completely trading below daily CPR. So on 18th September, it's an interesting day. On 18th September, the market is above monthly R1 levels. So this is 18th September. The market is trading above monthly R1 levels. So on a daily basis, the market is bullish. Now, as per hourly chart, the candles are trying to enter into the weekly CPR zone. And in hourly chart, the weekly CPR is wide. So the entire week is expected to be range bound. The distance between R1 and previous week high is also bigger. So obviously that week I will be expecting a range bound market. Now on 18th September, in the initial time, the first 4 hours, the candles are trading above weekly CPR. So I would look for long positions only. Right, so maybe when the market comes above daily CPR over here, I will look for a long position and my stop loss would have been hit. After that, I am not going for any short positions because the market is staying above daily CPR, weekly CPR, and I don't want to take a short position. And looking at the candles trading inside this specific level, no. Look at the size of the candles and look at the color of the candles, bull bear, bull bear, bull bear, looks like a range bound market, right? So probably I will go for a long position above daily CPR and my stop loss would have been hit. So that's fine. and I'm not going for any short position looking at the color of the candles. Okay, so it's a strict range bound market. Even if I have taken any short positions below daily CPR anywhere between here or here or here, I don't think I would have made money because of this dead range bound market. The next day, there is a huge gap down opening, and I can see the market is trading below weekly CPR levels. Now from 19th September, I hope it's 20th September. So from 20th September till the month end, the market was trading below weekly CPR only, right? So now what I would do, I will look for short opportunities only. Now look at this. In daily chart with monthly CPR, the candles are trading above monthly CPR levels, and the last 4-5 days the market is almost inside monthly CPR. So it means there is no proper decision. I don't know who is going to take control. So in this case, I have to take a decision based on hourly chart and weekly CPR only. So hourly chart and weekly CPR clearly tells me that bears are having some power. So I have to focus on short opportunities only. So from 20th September, I am going to trust the bears and I will go for short opportunities. So on 20th September, when the candles are reversing from S2, I will go for a short. When the candles are breaking S3, I will go for a short. So this is how I look for a short positions, because already the market is below weekly CPR, right? And the next day, again, I will look for short positions at every resistances. So at S1 and previous day low resistance, when the candles are breaking S1 and previous day low, I will go for a short. When the candles are taking resistance at S1 and previous day low, I will go for a short. When S2 is broken, again I will go for a short. So probably on 20th and 21st September, it's a quite easy trading day, right? Now the next day, 22nd of September, it's a white CPR. The distance between R1 and previous day high is high. The distance between S1 and previous day low is high. A white CPR. I will look for short opportunities only. Probably you cannot take a short position over here because daily CPR and previous day low is very much closer. So there is no room for taking an entry. So I will avoid taking long positions also. So probably 22nd September, I am not going to take any trades. I am not trusting the bulls, and there is no room for taking a short position below daily CPR. So I am staying away from the market. Now on 25th September, I will look for a short positions when the candles are taking resistance at daily CPR. So in this candle, I am having some room to scalp till previous day low, or I am having some room to scalp till the first candle low. So I will go for a short position. So in these kind of situations, the main thing which I will focus is reducing the quantity size. Okay, instead of 10 lots, you have to go for 5 lots. Instead of 2 lots, you have to go for 1 lot. Okay, based on your capital, based on your position sizing, you have to follow this rule. And I am not going to focus on long position at S1 and previous day low reversal. I am not going to focus on long position at daily CPR breakout. At least as of now, you can avoid these risky long positions. Okay, and you can just stick to the concept which I have said as per the hourly chart and weekly CPR. So avoid taking long positions. And on 26th September, probably I will look for a short position when the candles are staying below daily CPR. And in fact, sometimes my stop loss would have been hit in the first entry, and in the second entry my stop loss wouldn't have been hit, and my target also is not met. Okay, so anyways, it's a range bound market, so it happens, right? So 26 was not in my favor. On 27th, once again the candles are trading below S1 and previous day low. So in these accumulations itself, and in fact it is a gap down opening, so I can go for a short position in these accumulations. Okay, there is a gap down opening, the candles are sustaining below S1 and previous day low. I can go for a short position and I can book my profits at S1, S2 50% or even at S2 levels. All right, and if you are going for a short position below S3, then your stop loss would have been hit, because post S3 the market started to reverse. All right, Now, as I said earlier, I'm not going to focus on long positions because the candles are probably below weekly CPR, and the candles are probably inside a daily monthly CPR on 26th, 27th. So I'm avoiding taking long position. In fact, if you have taken a long position at S3 reversal and around S2 reversal and around S1 previous day low reversal, you would have made money. But let's keep it simple for this video. We are not focusing on long positions, right? And on 28th September, as I said earlier, I'm not going to focus on long positions. However, when the candles are reversing from R1 and previous day high, I will go for a short. My target will be daily CPR. So in fact, I got 2 entries in the third candle and in the next entry somewhere around 10:30. So both the entries are successful, and again, once again, I will go for a short position below daily CPR, and again this entry has been successful for me. So close to 2-3 trades we got on 28th September and it has been successful. And on 29th September, I'm not going to take any long positions because still the candles are trading around previous week low levels. Maybe when the market is reversing from previous week low, somewhere around 44,550, maybe you can go for a long position with a lesser quantity size. Okay, so that's optional, and you have to reduce your quantity size. Let me mark a line, quick line at previous week low, and let us check that in 5 minutes chart. So probably when the market comes above this previous week low and daily CPR levels, probably in these areas you can plan for a long and you can plan for a small scalping. Anyways, that particular day is a very wide CPR. You can even avoid taking any trades on these kind of days. All right. So the main part of this entire September month is the position sizing is the key. All right. When the trend is in our favor, when the candles are above monthly CPR, above weekly CPR, above daily CPR, you have to go with your full position sizing. On the other hand, if the market is not properly aligned with the higher time frame trend, then reduce your position sizing to safeguard your capital from huge losses. All right. So you can overall you can see this September month has been good if you have followed this simple strategy like S1 and previous day low breakout, R1 and previous day high breakout, CPR reversal for long position and CPR reversal for short position. These simple tricks still works in September 2023, and the entire month seems to be profitable considering some good trade opportunities. Now let us look at what can we expect for the upcoming month. What are the trade opportunities we can expect? What would be the trend for the upcoming month? So let me start with weekly chart of Banknifty. So as per weekly chart of Banknifty, what we can say is Banknifty is in uptrend as per weekly chart because we are having repeated higher lows, right? So these are some repeated higher lows. Okay, from here Banknifty went up, it came down, again it went up, again it came down. So considering this structure, Banknifty looks bullish as far as this level is not broken. As per Dow theory, if last higher low is broken, then it is a beginning of a downtrend. So as per Dow theory, this is the last higher low. Right? So this is first higher low and this is second higher low, and in fact this is the last higher low. So if there is any bear candle below this higher low like this, then it signals that it is a start of a downtrend. So as per weekly chart, we don't want this particular level to be broken down. Okay, let Banknifty come down, let Banknifty take support at this level, no problem for us. But this level 43,590 should not be broken. In fact, you can keep it as a round off level 43,600. So 43,600 shouldn't be broken for me to trust bulls. All right. And in fact, this is a tough resistance for Banknifty. Banknifty has not yet broken the all-time high. Okay, it is yet to break all-time high and it is yet to keep a fresh high. Though Nifty has broken all-time high and though Nifty has reached 20,000 plus levels, still Bank Nifty has not broken the all-time high levels. So we can clearly see Bank Nifty is struggling at all-time high levels, and as of now in weekly chart, Bank Nifty is stuck between these both support and resistance levels. So if Bank Nifty comes down, then as per Dow theory, it is going to be bearish, and in fact we can expect Bank Nifty to fall towards this support, which will be support 1. If support 1 is broken, then we will plan for support 2. So this is the plan for taking trades in Bank Nifty, and in fact if Bank Nifty closes above this resistance, above all-time high, we can see some good bull rally. Now let us come to daily chart. So as per daily chart, we can clearly see that Bank Nifty is stuck between these levels, right? So maybe Bank Nifty is going in a zigzag manner. Bank Nifty is traveling inside this channel. Now, one important understanding which I have in Bank Nifty is this is a hammer candle, right? Now, if you look at the earlier levels, so here we got a hammer candle, and that hammer candle low is not broken at all, and then Bank Nifty went up, and here also in these areas you can see this is a hammer candle, and that hammer candle is not broken, and in fact this is also a hammer candle, right? So these hammer candles lows are not broken. Okay, there is no closing below these hammer candle low, and then once again Bank Nifty went up. Now here also I am looking at a hammer candle, so that hammer candle low is also not broken. I need a proper bear candle closing below this hammer candle like this. Okay, we need a good size bear candle closing below that hammer candle lower week. Only then we can say that hammer candle is broken. Okay, so as far as this hammer candle low is not broken, 27th September hammer candle low is not broken, then I am expecting Bank Nifty to reach all-time high once again. I am expecting Bank Nifty to go towards the upside once again. From there, then we will decide what it will happen. Okay, but in case in coming days in the month of October, if this hammer candle low is broken, let me draw a small line at hammer candle low. Okay, so this is a very small line at hammer candle lower week. If this hammer candle low is broken down, or if there is a gap down opening, let's say market will be very tricky. We can see we can see a gap down opening also. So either this hammer candle low has to be broken, or there will be a gap down opening. In both the cases, we will start trusting the bears, and we will focus on taking short positions. Okay, and I will start being a bearish person in the market. So this is my trade plan for Bank Nifty. Now apart from this, if you are looking at any trend line patterns like this, sir, I am seeing a trend line pattern like this, is this right or wrong? Yes, this is also right. And here also a trend line pattern. Sir, is this trend line correct? Now Bank Nifty has broken this trend line. Can we expect Bank Nifty to fall? Yes, this is also right. And let's say if you are looking at a trend line pattern like this, connecting this particular low and the present swing low, this is also right. So as per technical analysis, there is nothing like this is right and this is wrong. Okay, all these three trend lines seems to be good and seems to be correct. All right, but more than this, using a simple support resistance like what I said right now, as per Dow theory, this is a very important swing high. As per weekly chart, we saw a Dow theory pattern, right? So using a simple support resistance like this is an important support and this is an important resistance. This even is more than sufficient. All right, and in fact I have seen a hammer candle and I have explained you my understanding and psychology. So based on this and based on the upcoming months monthly CPR and upcoming weeks weekly CPR and upcoming days daily CPR, you can plan your long or short position. So in short, below this hammer candle low, we are going to be bearish in Bank Nifty. And in fact, if this hammer candle low is not broken, then we will start focusing on long positions at every previous day high breakouts. All right. I hope you all enjoyed this Bank Nifty review video, and I hope you all enjoyed the trade plan for October month. Together we grow as a price action trading community. Bye.